Alright, we're back again. So, today we're talking about one of the more interesting things I saw on the internet today, and particularly about news that I saw today. And it's about, it's basically about the stock AI bubble bursting, right? I think it's a very interesting title, and I probably will use it for the thumbnail. I just wanted to discuss these kinds of titles and why it scares people so much, right? Right, so media does things to kind of scare people into selling. I think that's a given. That's what has shown to be giving the most engagement, not just from me saying that, but also from just pure research, right? Fear-mongering is the best way to get engagement, and sometimes I'm guilty for it too. I think my last video was just literally saying Bitcoin is now down, right? So people are guilty for it, but I think we as people who are speaking out and communicating to you guys online, and also for me as a reflection, it is very dangerous for us to be consuming these kinds of content because of what we would do as a next action step, right? It's fine and dandy to read through. Sometimes they make very valid points, like when I was reading Bloomberg, or was it Yahoo Finance, they were saying the AI bubble caused the stock market to crash, wiping out $1.8 trillion. Scary stuff. Yes, scary stuff, but you gotta keep in mind that you're investing for the long haul, and that's what I am doing. I'm investing for the long haul. I'm not interested in the short-term fluctuations, right? One interesting thing was when I pulled the S&P 500 to a weekly chart, to a monthly chart, to a yearly chart, I only saw a red drop during the 1 week time period. Other than that, in the monthly, the yearly, it was all green. It was all green. And this tells me one thing. When you invest, you have to look at the bigger picture. Now, of course, some people might say, okay, you can say that because, of course, you're privileged, or you have a job or whatsoever, you're stable, you have money in the bank. Some people are investing with their savings and stuff. So that's why I always go back to the point which I want to talk about today, is always have your NASDAQs saved. That means always have emergency funds saved. So during volatile periods, whether it be the 2008 financial crisis, whether it be the COVID, well, whether it be this stock AI bubble burst or whatsoever, you always have some sort of a background to fall on. So I always am a fan of keeping cash, right? I know some people might say the amount of cash I'm keeping is ridiculous. The amount of compounding that I'm losing from keeping that amount of cash might be not explainable, right? Because technically you can take that money and put it in the stock market, and if you look at the long run, every year you earn, let's say, a conservative 6%, you make way more money. However, I do believe one thing. As I mentioned before in my video, I'm not sure which video, but I always try to operate like a company. I always want to have liquid cash so I can invest in the company when things are not going so well, which of course is going on right now, where the stock market is dropping, cryptocurrency is tanking, etc. Gold assets are not doing so well, bond yields are dropping. So multitude of things to invest in right now, right? So I always want to have this cash ready for me to invest and deploy. But of course, you always need to keep a minimum amount. And how do you calculate the minimum amount? You basically just see how much you spend a month, and you kind of track that. and then you take that and you multiply it by 6 or 9 if you're conservative. I am a little bit more conservative, and I try to keep at least, I would say, 13% liquid cash in fixed deposits and in savings accounts and money market funds and things like that. So basically, my point is, with all of these negative news that you're seeing in the markets right now, you can always be very opportunistic and take that money out, like I will do in the next few months. If the drop is significant enough, take that money out and invest it during these low periods. And if you have the conviction and the confidence in the markets, you can definitely make a lot of money with this strategy. Now again, everything I say, again, for educational purposes, please do your own research when you eventually invest, right? Don't take a guy's words like from the internet. Don't take the word of a news reporter. Never ever take the word from an analyst on Bloomberg TV or CNN. I think they don't know what they're talking about sometimes as well. Always do your own research, have your own conviction, and have your why, because your why is what determines whether you would sell or not, and also your cash NASDAQ, right? You always need to have a very, very strong base before you go ahead and build your empire, right? And I think a saying I really like, Rome wasn't built in one day, right? So you shouldn't worry about all of these small things. Rome was built on ups and downs as well. So if you put it into analogy, in that analogy, we're doing just fine. We're doing just fine, right? So, I just wanted to make this short video about that. Nothing too big to talk about right now. Maybe just a little bit about the headline about stock AI confidence waning. I think we see this so often, right? With crypto, there was the blockchain wave, there was the Web3 wave, there was the internet wave, right? The dot-com bubble. There was every time there is some sort of technology. There was even the VR wave, if I wasn't wrong, the metaverse and stuff like that, right? There's always these sort of waves and trends that push the market up and bring it down after the hype has subsided. And if you notice, it always goes up more than it goes down, right? I'm not sure if you see it, but if you pull the graph out a little bit, maybe to like, let's say 10 years, try to plot whenever some of these trends started. The up is always more than the down. Now, I'm not saying that this time would be any different or anything, or we won't face a significant down due to some macro event that I cannot predict. But I do believe in the fact that if we keep investing, we are convicted in our stocks, and we know our why, we stay invested. I do believe that is the best strategy forward. Now, that strategy has worked for me. If you're a new investor, you could choose to follow that. Again, if you want to do more research on that, it's called DCA. Very disciplined way of investing. And I think it's one of the best ways to invest if you're not a sophisticated trader, or you're not into, crazy sort of graphs and tracking, every annual statement, every earning call, things like that. I used to do that, but got a little bit overwhelmed with work and with my studies, and stopped that eventually and just invested in the S&P 500, which is to this day one of the best investments I have ever made. Okay, so I want to thank you all for watching this video. I want to say best of luck to all of you all for the week ahead. It's gonna be a tough one. It's Monday for me, and I wish it could just be the weekends again, but we just gotta put our heads down, put in the work, get the grind on, do what we need to do, and keep moving forward. So wish you guys the best for the week ahead, and I'll talk to you guys soon. Thank you. Bye.